Hello traders, my name is Logan with Funding Talent, and in this video we're going to be doing the market forecast for the week of July 19th. In this video, what we hope to cover is the best technical setups that we are currently looking at and hoping to act on in this upcoming week, and as always, the fundamental drivers for us to be aware of and maybe stay away from as well. So without any further delay, let's get right into the video.
If we get this confirmation. Traders, so here we are back on our slideshow as always, and to start off this week, we're going to take a quick look at our fundamental drivers in this upcoming week, and thankfully, there's not as much as last week. So just for this week, all you need to be aware of is the 9:30 p.m. Australian dollar news on Monday, and then some more news for the euro the rest of the week. So Thursday, it starts off at 7:45 a.m. and then to 8:30 a.m., both Euro news, and then Friday, more Euro news at 3:30 a.m. Remember, these times are all EST, so around these times for the Euro, just be a little bit careful. So for our news, cases continue to rise due to the new Delta COVID variant. U.S. retail trade rose 0.06% a month earlier in June 2021 as the demand for goods remained strong despite the recent shift towards spending to services. And my question regarding the Delta COVID variant is, are we perhaps looking at a second lockdown order? And if we are, what are the implications of that on the economy now? So, besides that, tensions between China and the U.S. continue to rise due to new trade deals and tariffs. And what this does is it carries on into our risk on market sentiment. So for those who are newer to the series, risk on market sentiment means expectations are higher for further economic growth. And this means for our currency traders, you can expect the New Zealand dollar, the Canadian dollar, the Australian dollar, the euro, and the pound to appreciate, as well as indices globally if the risk on market sentiment continues. The risk on the market sentiment we've held for the last couple of months will not be changing until we get more bad news into the market. Once we get more bad news coming into the economy, then we will reevaluate and see if we are starting to shift into a risk off market sentiment. But for now, we're going to continue with our risk on market sentiment. Now, let's move right into the technical analysis. We are going to start off by looking at XAUUSD, which is gold, for those unaware. And what we're looking at right now on gold is last week we saw this retracement happen to this level, and it was a little bit steeper than we thought, but that was okay. We called the bottom right around here, and since then this week it's been coming up. My bias is going to maintain bullish on XAUUSD gold. But as you can see, we're starting to get a strong bearish candle here, so don't be surprised if we have a slight reversal in the meantime. For XAGUSD, which is silver, we've been in this consolidation zone, which we've been in for almost 2 weeks now, and about a month actually. And what we're looking at now is two different possibilities if you have not watched last week's episode. If you do, I go really in depth into this, so I recommend going back to watch that one. But for a quick overview, our bullish scenario is in the red, and our bearish scenario is in the black. So what this essentially means is if we get a break and close below the support line, our bearish scenario will be in play, meaning that we can set our stop loss, we can set our entry at the break and close of this next candle if we break and close below the support line. An aggressive stop loss would be right here, as this is the last touch to the last resistance line, or a more conservative stop loss would be above this level here. Now, if we bounce off of the support line, break up above this resistance, and then possibly push even higher, then your stop loss could be set at the low, as this was the last touch to this recent support line, which we've been testing. Essentially, we're in an apex right now. We're waiting to see the breakout. Once we get that breakout, that'll be the confirmation for the direction of our trade. For US 30, we've been looking at this since last week. We're still on a triple top with divergence, and what we're looking for is a strong bearish candle close, a candle close below the support line, or a third touch to this divergence line. My bias is bearish on US 30. Moving into NZDCAD, last week we caught a long trade on NZDCAD from this level right here, higher, and then in our last market forecast, I called for more bullish momentum to take place. That did happen, and we are now definitely at the take profit. If you're still in this trade, I recommend taking profit. As you can see, we've been very impulsive, and I'm not surprised if we get a reversal off of this resistance fractal, which we formed right here. For USDJPY, we called for a long after we got a confirmation of this support line. So we were at this level right here. This was our trade long. We caught this long. Take profit was hit, and then our entry was short was right here on this candle. And then since then, we've been riding the short. My bias is going to maintain bearish on USDJPY. This was a great trade that we did catch last week, as well as NZDCAD. And now we are looking at GBPUSD. GBPUSD is in this flag pattern, and what I'm looking for now is either a break and close before we continue pushing lower to this support fractal, or a bounce higher and more bouncing around in this channel before we actually get to this lower support fractal. But I do think we will head to the support fractal in the medium to long term, before bouncing higher, obviously. And then for our last trade of the week, which we're going to be looking at, is a head and shoulders on EURUSD. For those who are not aware, a head and shoulders is a reversal pattern, which is exactly how we'll be playing it. And the confirmation of this trade is a break of a candle and close above the neckline. This is the neckline leading from the left shoulder to the right shoulder. And that is what we're looking for this trade. The stop loss will go beneath the extreme of the right shoulder, and that is where it's set right now, unless we come back lower, obviously, take out this level, and then come back up higher, then it'll be moved. But we are going to be looking at this, and my bias will mate long if we get this confirmation on EURUSD.
So traders, again, this was the market forecast for the week of July 19th. We really hope you guys enjoyed it and pulled some valuable insight out of it that you can take into your own trading in this upcoming week. If you're not already following us on all of our social media platforms, be sure to do so, because we're releasing new content every single day across all of our various platforms, and videos just like this on our YouTube very, very shortly. As always, on behalf of everyone at Funding Talent, happy trading.